Hi, I'm Greg McIntyre with this week's edition of the McIntyre Financial Report, and I'm here with our benefit specialist, Ryan Begley, and we're going to talk about life insurance today, whole life versus term.
Yes, sir.
We think we might know the differences, but we really want to drill down and explain the differences.
Yep.
Okay? So tell us, can you contrast whole life insurance, Ryan, versus term life insurance for us?
Yeah,
Then
so,
we'll take them one at a time.
okay. Yeah, the most, probably the most common analogy would be a whole life insurance is kind of like buying a house. You can create equity, you can build a cash value in it, and it's something that you can sell and something that you can borrow against. Term life insurance is much cheaper than whole life insurance, but it's like,
And when you say cheaper,
yeah, the premiums.
and what are premiums?
Premiums are the monthly payments.
So my monthly payment's going to be cheaper.
It is going to be
on a
cheaper.
term policy
Yes.
versus a whole
Yeah.
life policy.
Yeah, it's kind of
And
like
why
renting
is
an
it?
apartment.
Go ahead. What's
So
that?
it's kind of like renting an apartment, you know?
Yeah.
It's
Term
gonna be-
life insurance.
Yeah, term life insurance. It's
Yeah.
going to be cheaper because, you know, in the apartment, you have people come over and fix your stuff when it's
Yeah.
broken and stuff like that.
But I don't get any value. I can't sell it.
No, you can't
I
sell
can't
it.
sell it. I can't cash it out.
No,
Right?
it's called pure insurance.
Okay.
So it's just insurance
That's
on
all
your
it
life.
is.
Yeah.
And when we say term insurance, what does that mean? What's the term?
So the terms are between 10, 20, and 30 years.
So I
That's
can
our
get a
terms.
term. It's for a term of or length of time.
Yeah,
Right?
it's a length of time. Yes,
Okay.
sir.
So that's why when I was younger,
Yeah.
I could get a 20-year policy.
Yeah.
When my kids were younger,
Mm-hmm.
a term policy, pretty cheap.
Yeah.
That's why I'm worth a lot more dead than alive right now. Seriously. I hope my wife's not watching this.
Yeah.
Because if I were to go, she'd think she was a rich lady until she had to pay for all my kids, my 6 kids' college, right?
Yeah, definitely.
But that's why I have term.
Yeah.
Is it was cheap at the time, I was younger, and I knew to replace my income over the time span that it took to raise my children and send them to college,
Yeah, that's a
all
good
6 of
reason.
them,
Yeah.
it would take a substantial amount of money.
Mm-hmm.
So I did some math, and I got more,
Yeah.
right?
Mm-hmm.
And then I have a small policy on her, or it's a rider on one of my term policies, I
Like
think.
a joint ridership.
Something like that, where if she passed, I would get a sum too,
Yeah.
but it wouldn't be nearly enough to replace what she does,
Yeah. Of
which
course.
is running the kids around, doing everything,
Mhm.
you know, really helping raise the kids. Yeah, you know, run the household is what her job is, and it's much more complicated than mine. So I should probably get more term if I can on her, or whole life. So that's term, right?
Yeah.
At different ages, see, here's the way I think about it too.
Mm-hmm.
At different ages, a term life policy looks more attractive to me than a whole life.
Oh, yes,
And then
definitely.
At say a more advanced age, the older I get, I'm like, man, I wish I'd done whole life. Because now, after paying for 20 years on term, when that's up, it's not up yet.
Yeah,
You're probably halfway through it.
sometimes you think about car insurance.
Yeah,
You don't use it until you need it, really.
right.
And that's kind of like term insurance. You know, you don't want to use it because you'll be dead. But
No, you don't want to use
you don't want to use
You don't want
it.
to you don't want to cash out the death benefit.
No, not at all.
You don't want to avoid that. Yeah.
But you're not accumulating any kind of like
Yeah,
interest.
it's like at the end of my 20 years, I will have paid in all those premiums,
Yeah.
and I get nothing for it.
It's
We
like
walk-
it's-
we both, the insurance company and I, walk away from the contract.
Yeah, it's not an investment whatsoever. Whole life insurance is more of an investment.
But it's my understanding, and I know because my life insurance company's been pitching me on this,
Mhm.
several life insurance companies, I can convert
You can.
as I age. They'll give me opportunities to convert
Yep.
my term to whole life.
Yeah.
Right?
That's true.
So you still might have an out there,
Yeah.
but probably wouldn't generate as much value as if you started with whole life.
No, it wouldn't generate as much face value of the like the cash value of the
Right.
policy. It wouldn't, because the length of time, the more cash you get.
So when we talk about, there's different terms we use with insurance too.
Yes.
And that's face value, cash value,
Yep.
and surrender value. Sometimes there's fees to cash out an insurance policy, and that would be the amount of cash you would receive plus any fees. That would be surrender. Okay? So if I wanted to cash out a life insurance policy, I could. I mean, I could just take that. It's easily convertible to cash.
Yes.
But I don't have to convert a whole life policy. And the way I accumulate equity in a whole life policy, just like a house, right?
Yeah.
Is I make premium payments, pay monthly payments, just like a mortgage. And just like a mortgage, part of those premium payments go to the insurance company, and part of it goes into the policy or an account, right? It builds cash value in that policy.
It does.
So it's like a savings account.
Yeah, it's just like a savings account.
And it's my understanding I can take money out,
You can.
or I can borrow money.
Yep. You can use it for collateral for a loan.
Right.
You
can put a security in.
Yeah, you can put a security. Yeah, exactly. And you can also sell them. And
You can sell a policy.
You can sell a policy.
Yeah.
I don't know. I haven't done it myself. But,
Right.
You can. It's an option.
But it gives you more financial options.
It does.
You're more financially sophisticated.
Yeah, I would say term insurance is for like either people that have you own a company.
Yes.
You have term insurance would be good in that area because you want that company's expenses and all that stuff covered. You want your wife to be able to cover all those. So for that,
Well, let's talk. So really, you're getting into business succession plan. So whole life versus term. Those things are things we need to personally consider.
Yeah, that's first.
And what's going to be good for us at what point in our life.
Yeah.
And those are conversations that you want to sit down and have.
Oh, definitely.
What are their goals? Insurance, it should be part of any financial strategy.
Yeah, every financial planning system should have insurance in it.
Right.
Yeah.
'Cause, it's the most solid investment out there.
It is.
It's the lowest risk investment.
Yes, it is definitely the lowest risk.
Right?
Yes.
It's just a no-brainer.
Yeah.
And to have that as part of the mix to stabilize.
I guarantee you right now, if people knew about life insurance, they would all go out and buy it right now.
You mean if they knew about it? I'm sure people know, they think they know what life insurance is. But you mean all the different bells, whistles, options,
options,
things you can do with different types of insurance.
Strategies, and
Right.
How many have we talked about in previous segments? How many even millionaires have used it to save their businesses and stuff like that?
Sure. So in business succession planning, insurance, life insurance can be used. They call them key man insurance policies.
Yep.
Okay. So that if I died, my business partner wouldn't be in business with my wife.
Yep.
The policy would essentially
Buy her.
act to buy her out.
Yeah.
It would buy her interest out, so he could be in full control of that business and get paid. Right?
Yeah, and there's also key employee.
Yeah, and then my wife gets paid
Yeah.
because she's now been paid for the value
Of that company.
of my interest in that company.
That's exactly right.
Yeah. So on our law firm side,
Yeah.
we engage in that type of planning, very straightforward. Key man, and then so we want to activate key man insurance policies on the principal partners
Yeah.
of any business.
Yep.
To pay for principal partners or key employees. That's a good point. To replace key employees, for example.
Because it's really hard. Let's say you have an employee that's just a rock star.
Right.
It's your money maker guy or woman that's killing it out there, and then they have to leave. They have some other issue. They have to move for family, or something happens in their life. They just have to leave. Well, now that insurance covers what they would have made you.
So many things you can do with life insurance. I mean, it's a godsend. Just from starting with burial policies.
Oh, yeah.
You know, how am I going to bury myself? Is it going to put a dent in my estate to do that? No, you don't have to. You can. It's so easy, basically, and super quick to get a burial policy.
Yeah, it's very easy.
We can do that.
Yes,
You can do that.
I can do that. I'll bury you.
It's so easy. I don't think that's a good slogan.
No,
We
no.
will bury you.
I don't think it is.
Yeah, but we can help, right?
We can help. We can help.
Yeah.
I'm not going to actually do it.
Yes, yes. So, and then, you know, if you have children, same philosophy, same thought process. How are you gonna replace yourself for your spouse? What if you and your spouse die?
What was your life value? You know, what did you contribute to that? You know,
So
your life.
you don't hear much about ILITs anymore. Those are individual life insurance trusts. Essentially, you know, when we're really planning for folks who are super serious about taking care of their children or grandchildren, a lot of times life insurance is a huge part of the equation.
Yeah.
Because that's where you can generate a lot of wealth to deposit as a beneficiary of the policy, because policies have beneficiaries. I started to do the show today. I'm really hot on explaining beneficiaries and getting deep on that.
Okay.
Let's do that next week,
Definitely.
because people think they understand beneficiaries, but we want to really get deep and explain how beneficiary assets pass. In this situation, I'm talking about a trust being your beneficiary,
Oh, yeah. Okay.
where the trust is going to receive a lump sum of money from an insurance policy. It's going to have a trustee, which is someone that you want to be, maybe a guardian of the kids, something like that. Look out for them. Dole out money for them to take care of their needs. And then we're going to program into that trust discretionary trust language to pay for health, education, and welfare, indicating your intent for that child, grandchild, to go to help, and the trust to help pay for university or trade school.
Yeah.
And then after that child has got some more age and education under their belt and life experience, let's say 25, still young, we might want to start doling out a percentage a year over a number of years. Maybe 10% a year at 25 after we pay for college. 10% over the next 10 years until exhausted.
And
the life insurance funds it, right? I mean, you know, business succession planning, estate planning, life insurance is a huge tool.
And having you use life insurance to kind of supplement, to like even out some of the beneficiaries, like let's say you leave a house to one kid, but want to leave something to another kid.
Inequitable distributions to children based on maybe a business going to one child who's running that business, the other child doesn't care, and we want to make up for the increased value we're giving over here. So we take out a life insurance policy on one of the parents or both that pays the child that's getting a lesser distribution, right? So yeah, that's absolutely in estate planning a great way to do that, to solve inequities in distribution. It can be used so many different ways. So we've got so many topics to bring you on the McIntyre Financial Report just surrounding life insurance. We're going to drill down and stay there for a little bit. One way is, I made you laugh. One way is, one thing is beneficiary designations, okay? So we're going to do one on beneficiary designations.
That'd be awesome.
Another way, good. Another thing that we ought to do on a separate show we're going to do is business succession plan, okay? So business succession. And another way is estate planning, life insurance and estate planning. Okay? So one thing you don't know about Ryan is sometimes I can make him laugh. Don't put a camera on him for a photo,
Yeah.
but in a video, I can make him laugh. So,
He can make me laugh.
yes. So, Ryan, any other information that we need to put out on life insurance, term life versus whole life?
Yeah, I think we need to, we're going to put up on our webpage kind of a visual to see, like what the difference is between life and whole life and term.
So that'll be on our blog coming up.
Yeah.
We'll have that
It will
posted
be.
in the next couple of days.
And we'll kind of go through the main things on it, and you can see it
Sure.
as a visual.
See how it works.
Yeah,
Right?
see exactly how it works.
Details of how it works. Anything else? Any other information you'd like to share?
I would love to sit down with these people. If you're interested in term life insurance or whole life insurance, or you want to know the difference or what would be best for you, please come to me. And
We're going to have a contest. Let's make Ryan laugh. Okay.
Okay.
All right. So but yeah, we're super easy to talk to. Ryan would love to sit down and discuss your family needs, your insurance needs, your financial needs, and talk about what plan is right for you. So you can email us at info@mymcfi.com. It's mymcfi.com. Or Ryan, if they want to call and set up a free consultation, what number would they call?
704-218-9223.
9223.
Yep.
Thank you very much for watching today's McIntyre Financial Reports. If you have any questions or comments, feel free to email us, comment below on social media, or shoot us an email at info@mymcfi.com. Wrong email. mymcfi.com. Thank you. Have a great day. Good job, man.